All right. We are in the green room talking about this reversal in the Qs and in the S&Ps. And I'm pointing out using the tick indicator, NYSE tick, which is the number of stocks trading on an uptick versus a downtick. And we put these lines down here as to historical extremes up and down. And when it does that, it gives us an insight as to when the market may turn or when it may continue. And so looking at these Qs, they were going sideways over here. And I can expand this a little bit, but before I do that, you had a couple of bars going sideways, and you got the tick extreme on the break. Now over here, clearly there was a lot of buying that came in, but the tick is still down. Right? Price is king, but we're measuring this objectively, and we're going to go to a higher time frame to get a clearer view because just looking at a 5-minute chart in of itself is not enough of information. Now, this tick came on a breakdown, and this is colored black versus red because I've applied the wide range bar scan to these bars to mark a bearish wide range bar or a bullish wide range bar. And so here's it was going down. On my other system, this did go to an extreme here, but now as it's going lower, it's making higher low ticks. Still quite negative. And so on some systems down here, this minus 300 is actually around a minus 1,000. But on this system, this is the way it measures it. So as this was going down, let me clear this. And what I said a few minutes ago, looking at SPY, and we always use the leveraged, all right? SPXL. But as this was going down, right, here's the tick, obviously, right? That's what we're talking about. But here's the tick extreme on the breakdown. That suggested or supported a bias it would continue to go down. And so another extreme, and then it starts making higher lows. And when it hit this extreme, I said, I'm putting a buy stop above that bar's high, assuming, because it's on the 50 MA, on the daily, assuming that it would reverse that. It kept going down. And then I lowered, as this started coming up, I lowered the buy stop to here. And that's where I got stopped in. And I'm putting a stop down below here. Automatically did that. It's down below there. And we've got a wide range bullish bar. That's why it's blue. So let's look at the daily chart. Let me get rid of that. Switch this. Daily chart. And right down here, let's go to SPX. First of all, we're on this one. So down here, I had alert on SPY at the 50 MA. And then on SPX, alert on SPX at the 50 MA. See what it's getting down there. And then Sam pointed out when it did not trigger above that bar's high. Said, well, when I was talking about the Qs and this, that it would go down to S3, trader pivot line. Well, maybe that's an obvious place where it could go. But the tick extreme is kind of giving us a heads up. It was already at the 50 MA. We all know that institutions do not want this to close below the 50 MA. That's kind of a negative, kind of a, they just want to sell. If it closes below there, some of them will, and then some, obviously, they're going to look at the 200, which is way down there. That's a measure of being extended so far from the 200 MA. And the weekly, this is a weekly chart. You got the 100 all the way over here. So I think ultimately, even if we get some stabilization, today, unlikely doesn't mean impossible that this could turn into a bottoming tail bar, but I think unlikely. But if it hangs here for a day, we get a sort of a 1, 2, 3. All right, the next stop could be the 800, which, again, in the weekend letter, as I kind of make some insights or assumptions, predictions, was that if it closes below 6,900, there was a higher likelihood that it could go down here and test the 6,800. As far as intraday trades, we've got a nice wide range bar. And what that communicates is we ain't the only ones looking at these reference points. I think that's an obvious. Institutions are looking at that 50 MA. It's a simple MA, not an exponential. And look, whether it's institutions, whether it's hedge funds, it's day traders, the reason we look at certain moving averages, like a 50 simple moving average, we don't try and get cute with Fibonacci's or exponentials. We want to look at what everybody else is looking at because it's a self-fulfilling prophecy. That technical analysis comes down to that. We're all looking at pictures, and what we should be looking at, I'm talking out loud because this is what I do in here, we do, is we look at what other people are looking at. So moving average on a daily chart, trader pivot lines, while subjective, you can see it didn't get down there. Other days it would have gotten down there because it's like a magnet that it would go down there. It didn't get down there. The Qs got closer to it, but the good thing about trader pivot lines is that no matter the time frame that you change to, 5-minute, 15-minute, 45-minute, whatever you choose, they're going to be in the same place. So another reinforcement of self-fulfilling prophecy. Now, when it's going down there, and just like here, we know traders are anticipating that that's where the downtrend is going to stabilize and possibly bounce. So there are going to be buyers down here. So as it was coming down here, I said there's going to be buy orders above that. I mean, they're anticipating. And it's not like I know for sure what's going to happen. It's that I'm assuming others looking at the same thing with the same thought, they're going to buy ahead. And those that can, institutions, they're going to continue to average down because they figure they're close. They're going to keep buying on the way down. Now, intraday traders that are looking at that trader pivot line, and there are buy orders down there, just like on the 50 MA, there's going to be buy orders. So they're watching this to come down there, saying, and waiting to get filled, waiting to get filled. And not that they're all looking at 5-minute charts. Today, many are looking at 1-minute charts. And you can see the trader pivot line is down here. And it certainly looks like it's going to go down there. So what happens? Many of them are going to be looking at level 2, right? Especially on spiders or whatever they're looking at. They're looking at their level 2. And they're sitting there on the bid. I'm going to get filled on the bid. And so I refer to them as passive buyers. It's like, yeah, I'm willing to get filled down there. You know, if you want to fill me down there. Now, I don't look at level 2 anymore, but I know what they're looking at. And so they're sitting there on the bid and they're watching their tickers and they're seeing all the red prints going off. And they're like, yep, I'm going to get filled as it goes down there. And all of a sudden, the ticker starts to slow and reverse, and there's a lot of green prints. And from there, they have to make a decision. Will there be a retest where I'll get filled? I see it's not happening. And it starts to move up. And so the psychological part of it is that, hey, I better take the offer and become an active participant. And they're active buyers. And so we know that there were sellers there at that pivot. You can see the reaction. Just like there are going to be buyers there, there's going to be sellers there. It's lined up. And so now it's stalling near the actual pivot line on a 2-minute. Go to the 5-minute. You don't see any pivot. But the power of this move, I don't even have volume on here. I suspect it must be, I would think good volume, but volume is secondary. But there should be good volume. And I'm looking over to my right, not my left, to see if there was a tick extreme on that move up, and there wasn't. There is. Yeah. So there should be a lot of participation. That's what you want to see with a wide range bar. Good volume, that there was a lot of participation and it moves up. So now, look, there should be buyers on dip. If this dips down to the trader pivot line, there should be buyers. It's not dipping down there. Now, with this kind of momentum, I look at the 2 minute and it's like, this is the thought process. And that's why, when I created the courses years ago, I didn't call them modules like I did in the old company. I called them thought building lessons. Because that's really, as traders looking at charts like this, we have to control our thoughts and our beliefs based on the technicals, our method. So when I look at this chart and I see, okay, it stopped at the pivot line and kept going through. That tells me that, yeah, they're obvious with sellers going to be there. And then it pushed up through, and that's a good thing. Now it's at the next sell area. So as this pulls back, the thought process would be that buyers should be there. Not only should they be there on the line, they should be anticipating, meaning there should be bids. If we were to look at a level two, right, whatever the number is, and this changes very rapidly on a level two, that's why I don't look at it. It's just, too much information. But they should be bidding here at the line or above the line. So, yeah, you can be exact, and they're getting filled there on the line. There's some support there. And now we'd like to see them, the same story like down here, and it's coming down a little further, that they start taking the offer. So from there, we go to the 5 minutes, coming down quite a bit now. Right, the middle of that bar should, right, that's where we'd like to see them begin to step in, on the 5 minute chart. Right, the middle of that bar is what we want to see, meaning anytime I see a wide range bar like this, right, the theoretical is that the halfway point buyer should be willing to step in on that. Now, granted, that's in a big downtrend. It's a big nasty day. Got this big up bar. Now let's see, if it can get bullish 180. If this becomes a bottoming tail bar, and there's still time to go in this bar, right? And I'm looking over at my other screens there. So there's a pivot line on the futures. So that is a reference point, right? Not on this chart, but on the ES, it came down to a pivot line and it moved through it a little bit. I can't show you that because this platform doesn't have pivot lines, but I can see on the ES, it was a pivot line and it poked through it and poked right back up again. And yeah, the Qs have a big green bar, and the diamonds, they all popped up quite nicely. So now traders are deciding, should I get in? Is it going to keep going up? Is it going to go back down to the lows? What's it going to do? And based on the time frames that others are looking at, I'll just go back down to a 1 minute for the moment. Okay. Does that bring in buyers after a wide bar down? Well, maybe. I mean, obviously it brought in buyers, but where does it go from here? You start applying bar by bar analysis and retracements. So I'm just talking about a 1 minute chart now, but everything's applicable. Wide range bar down, middle of the wide range bar. I'll say it's only a 1 minute chart, but it penetrated halfway. Bar by bar analysis based on the time frame that we're looking at. So everything, as I said, applies to all time frames, but the smaller the time frame you go down to, the more you begin to see more bars and potentially more noise. And you have to figure out what is your ideal for you. So now, just based on the pivot line, This coming down and came right back up again. Traders thinking, oh, I'm going to get filled on a retest. They should be willing to buy at the pivot line that it got back above it. And so we continue with this thought process. So the 5-minute chart is still not done, but when I said forming a bottoming tail bar. And you know, this may be new for some, it may be repetitive for others, but repetition is what reinforces anything that we do. So, wide range bar, bottoming tail bar can dip. Bodies should stay at the top in the upper third or upper half. Now, this becomes a bottoming tail bar, which looks like it's going to. The bar's not done yet. But this should continue up. If it's a bottoming tail bar, then of course it's got to take out that high. But this price action, right, is supportive that buyers are stepping in, waiting to see if this bar gets done. It's got a few seconds left. Ideally, it's going to be a tail bar, and there it's done. So now, can it take out that bar's high? And so, again, bar by bar. So this another 5 minutes to go before this bar is done. It's consolidating after the wide bar. And everybody's trying to figure this out. Right? Is it going to go back down? Is it going to hold here? Traders are looking for information as to confirmation of the turn. So if it can take out this high, it should go up. And if it goes all the way back down to the low, right, and it shouldn't do that, but it wouldn't be out of the realm of possibilities for it to do that after this decline. Now think, where's major support on this chart? On this chart, and we could look at others, and this was the little bit of the acceleration. I was saying, hopefully we're going to get some kind of an acceleration down to that 50 MA on the daily or this pivot line. This is our major resistance. The pivot high prior to the lower low. There are no pivots. And you know what? There's no poke bars either. There is a sort of a 1, 2, 3, 4 there. And look at the green bars. Look at on the way down. Green bar ignored. Green bar ignored. 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 And now the reversal should be, to a certain degree, red bars being ignored. So we just, factory work. Factory work. Waiting. And so 1 minute time frame, little more detail. If you were so inclined, pivot. Again, everything applies to any time frame you look at. Run up is momentum. It creates a void. A pivot creates support. There should be buyers on a retest of new support being created. I see evidence of that. Now, can it continue to do that and develop that into the 5-minute time frame, which needs to create, hopefully, a red bar ignored. If that bar is done and it's red, it turns back up, where this becomes a bottoming tail bar. There's still time to go in this bar. It's not done. You got to watch the time. Down here, this is really small. Trying to find where I can change this. You can see the timer down here. It's just so tiny. but I can barely see it. It's got about a minute and a half, a minute and 20 seconds to go in this bar. So, and what we looked at on the 1 minute chart, there was a retest and reversal down there. And I'm not suggesting to you you should look at a 1 minute chart. I'm just pointing out that the concept applies to all time frames. The higher time frame signal should be more reliable, meaning a red bar ignored, or it becomes a bottoming tail bar and then takes out the high. It should then continue to move up. And so now we got two pivots on the 1 minute chart. And you know what? I'm just thinking out loud here as I'm talking, of course, but it would not be unusual for it to poke under those lows and then flip up. Yeah, it's right. They're battling here because there's so much uncertainty, about, hey, everybody can recognize this looking at an intraday chart, can recognize the power of that move. And they watch the whole thing going down. And so a day trader should want to participate now if they're thinking it's going to go up based on that reversal. And I bet you some are still short, and they could be right, and that's why it's a battle. So now it's retracing, and I wish I could figure out how to change that little timer down there for that bar to be done. It's got 20 seconds to go. If you got good eyes, you can read that, because I'm straining to read it. And the idea is you're applying bar by bar. You're watching the time, 4 seconds to go. The deeper it can retrace into a red bar, there you go. Right near, there was a little buying surge. You see how that bar popped a little bit right at the end? And it's just a 1 minute chart, but pivot, pivot, buyers down there. Now, at some point, it's got to take that out, because, another concept or thought, part of the thought process is that sometimes prices go down because they didn't go up. And what that means is traders are looking at something and they're anticipating, and there are buyers stepping in here. That, I show you the detail on the 1 minute. And at some point, it's got to start to move higher after this. Otherwise, traders start thinking, oh, they just can't take it any higher. They become impatient. So ideally, this is going to result in some more buying. And I'm looking at some of the other four horsemen to see if they're showing a little bit more strength or weakness. And they're kind of the same. And you look for clues. And you can look, other time frames. We can, look at the 15-minute chart, and you see the big reversal bar. It's at the top of the reversal bar, and right now it's just jiggling around. To figure out, I'm looking for the thing where it shows me where I can make the numbers bigger. I probably have to get out of this big chart, but I made it big so everybody can see it. So we're waiting. We're waiting. 5-minute bar. Some time to go. All right. Back above pivot line. There's still time to go. The deeper. Now, when we talk retracements, you've got traders, of course, that are looking at their fib lines and looking at things. right here, right? They're going here to here. I don't even have the fib lines on there anymore. Anyway, you know what I'm saying? Like they're looking some kind of Fibonacci retracement. Maybe they're going to buy whatever reason they're going to be doing anything. Right? If we can get this 5 minute bar to close deep into that bar, that's reinforcement that buyers are stepping up in this same area and they can retrace it deeply into this bar and ideally close above that trader pivot line. So the more this develops in this time frame, penetrating up here, staying above there, eventually you get confirmation in this time frame that it trades above that high, and that brings in more buyers. But the more it can hold here, the more traders start thinking, I'm not going to get filled down here. The whole idea of passive buying, I'm going to bid based on some reference point that I'll get filled cheaper. And eventually, people, traders have to start thinking that's not going to happen. And that's what brings in, I use the term active buyers. So there's another bar that's done. Got a green bar, a little bit of a red bar ignored. Now, ideally, it percolates now. There's not a bottoming tail bar, and it held the lows. And well, let's see if it can get back above there. I think you can make, yeah, it looks that way, right? I cannot make it bigger because this little box here, that's not the, is that that one? Yeah, no. It used to have it somewhere. It was easier to find. Anyway, it's shaping up like it's going to go higher. Here's a 30-minute chart. I usually have it on a 65-minute chart. That's a green bar. And so now we want to see it move up.
Diamonds breakout on the 5.
I'm not looking at those, but yeah, yeah.
Yes.
It
That's
took out the top of
yeah,
the wide range bar and the diamonds.
yeah, best of the 4.
Yeah, and the Russell and the diamonds have been stronger.
Wow, Duolingo 550 to 120.
All right. I don't want to make this recording too long, but ideally I'd like to see this follow through to have that in the recording. I'm still searching for the box that allows me to make the numbers bigger. Yeah. Yeah. I haven't closed that. I haven't closed the SPXL. That's frustrating. Find this thing. Anyway, maximize. That's ridiculous. Wherever they put that thing to increase that, it used to be easy to find. I guess a color grid. That's one more date scale. All right. So here, real big. And now you can see the timer there. And at this point, you can forget the daily chart. It's all about intraday. And so the ticks, you see the ticks, the lows of the bars inching up. But so far, they're just not picking up steam over here. And the Qs are weak because tech has been weak. So we're waiting. The S&Ps, they're holding that. I mentioned there was a trader pivot line on the S&Ps. So they're buying it down there, but it's already had 3 times. And other days it would have ripped higher after the third one. That was only on a 1-minute chart. Looking at there, the 5-minute chart is still just going sideways. All right. I'm going to turn off this video because it's kind of long already. We'll continue to monitor here.